Hi, it's Lee and welcome to the Tesla Economist. Obviously with the markets where they are today, we are certainly in a down market. The question is, how long will it last and how low will it go? The current interest rates that we're at today are not sustainable for house ownership in some nations and governments in others, and will not last forever. We've become a global society dependent on debt, but this is only sustainable at lower rates. Without that, it all falls apart. So they have to eventually return. Right now, we're facing the bill for COVID. You simply can't print this much money without serious repercussions. Governments are doing what they can to make other people pay for the bill. Right now, it's the people who can't afford to make their mortgage payments anymore and have to sell during these times, something that was prevalent in the US in the global financial crisis after a massive property bubble. The same is true now. Anyone who sells their assets know they're going to lose, and it may be hard to ever get back into the property market after, or the stock market. And this is why I warned everyone at the end of last year to make sure you have something put aside for a potential recession to see you through a down market. This is when we were celebrating $1,100 or $1,200 stock price. I even mentioned a hedge portfolio of shorting a few stocks. GM and Ford were the two I mentioned, and I was happy to hear that some of you actually listened and did short them. Well done. I didn't do it myself. And even if I had, it would have been difficult to time. GM and Ford actually rose first after I suggested this, and if it was puts, then 6 months expiry wouldn't have been long enough. I did in fact end up taking a large amount of profits from my leaps, enough to cover my taxes and my mortgage for 3 years, and a little extra in case some more bargains rise. More bargains did come, and being so bullish on Tesla, I can't help it. If I have cash available and Tesla drops, I can't resist it. So that tax money, bonus money, and 3 years mortgage money is now only tax money and 2 years mortgage. And we still don't know if we have hit bottom. All sorts of crazy things could happen in the world right now. Warren Buffett's saying, only when the tide goes out do you discover who's been swimming naked, is very germane to this situation right now. If you were on margin, something that I have never ever suggested anyone do, and people in Patreon have asked me about margin strategies in the past, I give them the same answer. I would never risk any chance of losing my Tesla shares. I don't tell them directly what to do, but never suggest it, and try to help them realize the dangers. For leverage, I choose leaps, and leaps not options, so there is enough time of holding to cover yourself in a time like now. And a time like now is when you try and make it through to the other side. This is what separates the winners from the losers, making sure you can get through the down market, as some people have to pay this bill for all the government's insane spending, or the greedy bankers leveraging the economy to the tilt until it bubbles, or when e-commerce startups hit valuations of $100 million that only produce a few $100s in sales a day. If the economy hadn't hit inflation, then we would have a recession for some other reason instead. Crypto might have kept going and eventually got too big and popped like any other bubble. There's always something. Then the economy needs, as Elon says, its economic enema. Usually when people can't afford their mortgage payments, it's often due to losing jobs in a down market. Even if interest rates do get too high, people can make sacrifices other places. Interest rates are very inelastic, maybe the most inelastic. But we have a strong jobs market too, and potentially pay is rising, or will rise, to adjust for the extra inflation. Minimum wages have risen in some nations already. So what if that means that people can afford to keep their houses and stocks? It feels like a lot more people are aware of the economic cycles these days, the boom and bust cycles. And the trick is not to buy in the boom and not to sell in the bust. Well, these are old cliches. Buy low, sell high. And there is blood on the streets now, but do you have the gusto to buy more stock? Are you being greedy when others are fearful? Okay, enough of the platitudes. Although I wonder if Berkshire Hathaway is buying yet. Let me know in the comments if any of you follow it. This is the Contrarian investing strategy, but the thing is, you need to have the cash available in order to invest now, and most people have already invested it in the bullish times. It's all very well saying buy low, but you do need to sell high too, and you may never know how high it may go. Some people took profits with Tesla when it was equivalent of $100 and missed it going all the way up to $400. Uncertain times for sure, and the feeling it could get worse, and to cash out now and take some profits whilst you still have something, This time it's different, just like every other recession was different. This is the end of the global financial system, just like they say every other time too. Yet here we still are. I still think there is more inflation to come, in a big way, and no one is going to want to buy US government bonds, if that's the case. We've already seen something similar in the UK with the Bank of England, which means equally it is scary holding cash. There doesn't seem to be any good place to put your money right now. You don't want to lock in a fixed return with bonds if there's a lot of inflation on the way. For those of you experiencing your first recession as an investor, it's great experience. You need to go around the block to become a real investor and understand that there are these sorts of times. It's not always time to party and celebrate, and that investing is not without its risks or dangers. Try and remember what this feels like for the rest of your life, and the same, try and lock in that feeling of what it was like at the end of the year when prices were going crazy. This will help you judge future investing and help you realize you can't predict the market or time the market. There'd even been several potential crashes already this year before we got to now. With the war and inflation concerns, Tesla's stock price dropped to $280, but then recovered back to $310, then another to $270, and recovered back to $320. It was on that second recovery that I sold some leaps, as it was looking too risky for me. In the global financial crisis, I was hit extra hard. In New Zealand, we didn't have as an extreme property crash as the US, but it wasn't great. But my business was still doing all right. In fact, the US dollar even strengthened, and that was the currency my income was paid. So I was doing better than usual. I even bought a BMW M3 in 2009, but interest rates rose to about 6.5%, and I had a reasonable sized mortgage. But you never know what can happen, and a black swan event occurred. There was an earthquake in my city. Luckily, I was fine, and my family too, but hundreds of people did die. It wrecked my house and crashed the local property market, meaning anyone who sold at that time took a huge hit on their property, and it was very hard to even sell. Then, on top of that, my business basically went under. I was now stuck with a house that I couldn't sell, a mortgage I couldn't afford, in a city with no jobs available. I was in trouble. I never worked harder than I have then, and never felt stress like that before. I ended up working for my dad's business, which at the time was also barely breaking even, and I had no choice but to turn it into a profitable company. Anyway, I can tell you more about that some other time if you like. Either way, that was a big lesson for me, and I am suggesting that you use what is happening currently in the economy as a lesson to you. Don't fly too close to the sun. But then holding through these times and making it through to the next round is what it's all about, as long as you backed a winner. Microsoft hit about $37 last boom and then crashed to about $17. However, even now it's $230. Google went from $16 to $7. Now it's $96. It's all about the price at which you sell. The rest is just noise. Or perhaps you'd rather compare Apple, a company that saw a growth through the last recovery at about $25 and then crashed to about $14. It's now $138. Anyway, my overall point is that these times will be tough, but if history is anything to go by, then we'll come out the other side and PE ratios will return to a more realistic level. Besides, although the US dollar looks like a winning asset right now, if there was a winner, perhaps least losing, there is so much potential inflation on the way to reduce its purchasing power. So who can even say if that is a good asset either? Being a good investor requires keeping your emotions in check and being patient. But Tesla still has a tremendous amount of growth remaining. Personally, I'm happy to see this through. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.